The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short mindset reset and technical video as we are about to end the month of September and begin a new month, new timing cycle. October starting on Wednesday. That means it's a non-farm payrolls Friday week. But number one, a reminder that all markets do the same 3 things. Going over the importance of keeping everything simple and focusing on the highest probability / possibility days for high probability setups in your session. Keeping everything simple, repeatable, and scalable. Now, Monday is day 1 and the opening range in a new week. I want people to think really simple. Monday's day 1 every single week. It's the first trading day in a new week, and that day opens up the new week. Everything is based on Friday's closing price. Everything starts from Friday's closing price. Any market, any instrument. Now, whether you trade your favorite instrument or a basket of instruments and you're hunting one particular signal day, as I mentioned to one trader yesterday, send me the screenshot of the signal day that you're hunting and what the actual setup should look like. So if you don't actually have a setup or a signal that you're hunting, you'll be going there looking for trades, which you can still do. If you're trading one instrument, you can be focused on one particular instrument looking for buy low or sell high opportunities if that's, your expertise. So one of the things that traders can look at is even if you're following a basket, so I'm looking at 4 indexes or 6 indexes, do any of those indexes give me a signal day? I treat each one of those as one. Whether it's a metal giving me a signal day, gold, copper, silver, or is it the Russell, the Dow, the NASDAQ, or the S&P? I'm looking for one instrument to give me a signal, or I can have those instruments up on the day looking for signals on the day. So we have our signal days, closes and breakout, multiple days and breakout, first red day, first green day, inside days. Okay, we've talked about this in the higher time frame videos. The same signals over and over and over again, any instrument. So if you're following your favorite instrument, you could see a cycle of these signals repeating over and over and over again. We can have first red days starting off a new month. Tomorrow's the first trading day in the new month. We can have first green days. We can have days in breakout, closing in breakout, multiple days closing in breakout. We can have inside days forming at extremes, monthly lows, monthly highs. Now here's a really important slide for traders to understand. Day 1, Monday day 1, the opening range, that establishes the new high and low as we head into a new week. Now, if we have a signal day on a Friday, the closing range of the week, Monday can be on our watch list on that particular instrument. If a higher time frame boundary is not broken on the day, Monday forms a box. It's that simple. Monday forms a box. If on the day we break out of Friday's box, our signal day, whether that's a monthly level, weekly level, or just a daily level, we now have a signal on the day itself. So we have signal days and a signal on the day if it breaks a daily level. So on Monday day 1, we're building a box, and if we haven't broken a higher time frame level on Monday, we're inside. And this is why I say to traders, avoid the interdiddle trading. Gap sweeps, hunts, runs, swings, inversions, draws on liquidity, all that stuff. You can trade anything that you want, but remember what I said I'm targeting. With all of these setups, every single signal is about targeting a daily reversal or trending range opportunity, a daily range. The playbook is all based on the daily time frame. We're targeting the highest opportunity probability days. So when traders are constantly looking for trades on smaller time frames, you've missed the bigger picture. I'm targeting the A++, A++, A+ opportunities. So it's important to just be patient and allow markets to set up. If we're at monthly extremes, the next important thing to understand on a Monday, day one, the opening range of a new week, is where are we in that monthly cycle? So we're looking at a daily chart of the NASDAQ. And again, I'll repeat the same things over and over again because nothing changes. New month, new timing cycle. When we start a new month, we're at the end of a month. Today's the last trading day of a month. We can see a new cycle begin on markets. Week 1, week 2, week 3, week 4. Open, low, high, close. Open, low, high, and we're about to close out the new month. So as we head into the last few days of the month, on the NASDAQ, just as an example, we had an inside day on Friday as a signal day. Now, I want to emphasize to traders, there are traders who understand what they're looking for, they're patient, they're sitting on their hands, they know exactly what their setup is, and there are only two setups. We talk about this in every single video, a buy setup or a sell setup. Markets are either in consolidation or in breakout at the close of the day on any market at any given time. So I want to repeat, simplicity. There is nothing complicated. When traders say, I'm so confused, I just say the same thing to them. What signal are you looking for? And then what is the setup supposed to look like? There's only two. So if you're struggling and I say to you, send me the screenshots of the setups, I literally mean to send me the screenshots because there are only two, whether it's pump coil and dump, dump coil and pump, or trap and shift. So that's important to step back and stop trying to look for trades and be patient and be willing to sit on your hands and then hunt the highest quality setups on the day. If there's no setup, don't force your will onto the market. It doesn't matter what instrument it is, they all do the same things. We can see a market closing out the month in breakout. It goes into consolidation and breaks out again. Now here's the thing for traders to think about. Many traders are trying to trade inside of the consolidation with no setup or no edge. Other traders are waiting for the markets to actually break out, close in breakout, and then form their thesis based on that. So we have a month that started off as a first green day month. This is not my theory or anything else. This is how markets work. They're either in consolidation or breakout, and they only do three things. They break out, and that breakout succeeds. Or the market breaks out as it did in the short direction and reverses. That breakout failed. That breakout has now failed, but the breakout in the long direction is still intact. Remember what I said. Mark off your breakout candles. Algorithm, no algorithm, soup, no soup's irrelevant. Markets only do three things. The breakout either succeeds or it fails. And if the breakout succeeds, understanding if you're trading in line or with that market, aligning yourself with the higher time frame template, we can still have A+ setup opportunities for reversal trades. We can still have markets that will continue with trend trade, V-bottom continuations in sessions. We can have markets that will break out again, new week, new timing cycle, and that breakout will fail. And that market will go back to where the breakout began, keeping everything simple. There's nothing complicated. It's traders chasing movement and not understanding the higher time frame that gets them into trouble. Now we have a market that broke down, and where did the market go back to? Where the breakout began. Monday's day one and the opening range in a new week. Now we were on the second last trading of a new month. We have Monday's opening range. On Monday, the opening range, we can look for, again, number one, a signal day, and then signals on the day. Signals on the day. We're talking about daily levels being broken. So we have signal days, and we have signals on the day when a daily level, monthly level, weekly level is broken. Signal day and then signals on the day. Have we broken a previous weekly, monthly, or daily level? Monday's day one, the opening range. If Friday forms the extreme for the week and a market, especially at a U.S. index, has broken out earlier in the day, we now have a signal on the day. A daily level is now broken. Otherwise, the market is still in consolidation. So remember, markets only do three things. If the market's in breakout or we have a signal day, on the day itself, have we broken out again? We're either in breakout or in consolidation. So on a day that breaks out on a Monday, the opening range, we're now targeting an instrument that potentially has a 3-session setup. So for example, we can have the NASDAQ, it's broken out on the day, we have a signal day, and it's broken out on the day. We have two blue lines that we can start with. Why is that? Because the market broke out the previous week. That breakout failed and reversed back, which closed in breakout short. That daily level now is potentially a target. There was higher time frame selling above there. There was higher time frame buying below the inside day candle. That box now on an opening range, although we're inside, we still have daily levels that could offer traders an opportunity. Now the next question is maybe there was a better setup on another instrument. But again, timings, levels, behavior of price. What did this look like in the New York window? Now all we've done is draw two blue lines. We have a market that has broken out on the day. We've broken out of Friday's high day, the inside day signal day. It's continued to trade higher before our New York session opens. We can move that level up. Why is that? We redraw our levels because the market has made a higher high. It's made a higher high. So there's our high, and we have our low of day boundary as our new low. The market has broken out of the inside day. We have breakout traders in the market. Now, I'm just drawing blue lines. That's all I'm doing. So traders need to understand, okay, I'm going to draw my lines, but which one is actually the best setup on the day? We have a market that breaks out at the New York Open, 9:30 a.m., the market breaks out and trades higher. Now remember, I've said there are only two setups, dump, coil, and pump, coil, and dump, or V-bottom, buy low, or A-top, sell high, trap and shift patterns. That is it. A buy setup or a sell setup. There is nothing else. Markets are only ever in one of two phases. They're in breakout or in consolidation. Once the market opens and it goes into breakout, there are only two things this market can do. Continue to trend or reverse, and the breakout pulls back inside of the trading range. How does price behave in the timing window? I want to emphasize to traders, you don't have to trade any of these setups. But I'm walking through the process and reinforcing to traders simplicity. Simplicity, simplicity, simplicity. We have our high-low box. It's Monday, the opening range. The opportunity is going to be a session nail and bail on this particular setup. We're Monday, day one. It's the opening range. That establishes the high and low into the new week. We had a signal day and we have a signal on the day. We've broken higher time frame levels. There are only two types of setups, sell high or buy low, whether it's trap and shift or pump, coil, and dump. No major red news on the calendar. We can project a neckline across where volume is getting trapped outside of the breakout up high. Breakout, breaks out again, breaking down. Our 10 a.m. starts the new 4-hour rotation, our coil sideways, our engulfment, and a nail and bail simple entry, stop loss, and a take profit level. An A+ session trade setup opportunity, day one, the opening range. Now, there were other opportunities. We'll look at those in a moment. But what I want to emphasize to traders is that there's nothing erratic or impulsive or irrational. It's the same setups over and over and over again. Pump, coil, and dump. Pump, coil, and dump. Entry, stop loss, and a take profit level. It's just a trade. It's a simple repeating trade setup. There's nothing to do. Traders had over an hour to sit there and allow the setup to take place. The problem is that some traders are sitting there being patient, waiting for the opportunity and the entry. Other traders are trying to catch moves everywhere, and they're getting stopped out or chopped up, and then they're saying, well, why didn't that work? And I keep repeating the same things. Sit on your hands and wait until the market sets up and is about to accelerate into the move. We're not trying to catch the high or grab the low or catch some pips. It's an entry, a stop loss, and a take profit trade setup opportunity on Monday, day one. We had a signal day, and then we had signals on the day. What are the signals on the day? It's already broken out of the previous daily level, the inside day level, but we've also broken through another higher time frame level. Another higher time frame level. And that's what offers us asymmetrical risk reward. We're risking 1R and we're targeting the other side of the range. two blue lines, training your eyes to move horizontally at the levels once the market has broken out. Very simple. There's nothing complicated. Looking for the same setups on any instrument, whether it's an A+, an A++, or an A++ opportunity. We can look at the same setup on the Dow. We can have two screens open or two charts open and seeing which one, when the market's open, offer us the best setup. We had Friday closing in breakout. That's a signal day. We had a market that broke down on Wednesday closing in breakout. That daily level is now potentially a target. Remember the three things that markets do. They break out, they pull back, and they continue to trend. They break out, they pull back, they fail, and reverse. If this market has already broken out on the day, remember signals on the day, we come to our New York session, the market's already broken through Friday's high of day level. We may now be in a larger box. There's my blue lines, strictly from the daily chart. Does this market offer us a setup in our timing window? Timings, levels, behavior of price. Now, all I've done is draw blue lines on my chart. The next most important thing is, what time is it? What level am I at? And do I have a setup? Pump, coil, and dump. All I've done is draw blue lines. Now, for traders who are struggling, I'm going to encourage you to stop looking or taking trades and start hunting rinse and repeat setups. There's nothing to do except be prepared on the day and then understand what type of setup there is, whether it's a sell high, a buy low, or no setup at all. Keeping things simple, repeatable, and scalable. Markets only do three things. And it reinforces that traders do all kinds of crazy things and say, oh, it didn't work. But all we're doing is hunting the same setups over and over and over again. We had a signal day, a market that closed in breakout. We also know that everything starts from Friday's closing price on Monday morning when the market opens. We know there are only two setups, a buy setup or a sell setup. And then we had a signal on the day. Daily levels were broken. Signals on the day. Daily levels broken. Traders from the masterclass will recognize that we have all time frames aligned, and at the New York Open we have an explosive coil from level to level, a scalable 5-star opportunity. So again, separating and looking for the best setups, we had markets that both gave signal days, and the US index, they had signals on the day. Which one offered us the parabolic opportunity? Both of them offered reversal trade setup opportunities. The Dow offering traders an A++, a daily range. The NASDAQ gave a range reversal trade from level to level, an A+. Still a 90-10 parabolic reversal, but we had a larger asymmetrical risk-reward setup on the Dow. Signals on the day and signal days. 3 session setups on a Monday, the opening range in a new week. Tomorrow is the first day in a new trading month. So again, keeping things very, very simple, we have non-farm payrolls on Friday, stepping back, allowing markets to give us signals and then signals on the day, and looking for parabolic, scalable, repeatable, simple trade setup opportunities. These are the type of trade setups that can significantly compound a trader's account. Being prepared, drawing our levels, and then being willing to sit on our hands and wait and allow the markets to set up, whether it's pump, coil and dump, or an A-top, trap and shift pattern for selling high or buying low. Keep it simple, traders. Rinse and repeat. Keep things simple, repeatable, and scalable. Having your levels drawn, having a thesis in place, looking for the best setups, not any setup, the best setups. And then in between, sitting on your hands and not engaging in any other random, impulsive, or emotional, potentially self-sabotaging, degenerative gambling type of behavior. Rinse and repeat setups. Nothing changes. It is what markets do. It's got nothing to do with me or what I think. But what does the trader do themselves? Hunting out the best setups or just looking for trades? Keep it simple, traders. It's a winnable game. Play to win, and may the markets go with you.